So Wednesday the 19th of April. Let's have a look at the news flow from this morning, and obviously much of the press dominated by the surprise announcement and turnaround in direction from Theresa May and the Conservative government by calling a snap election on the 8th of June, which obviously saw a dramatic rise in the sterling currency yesterday. Inverse correlation then weighed on the FTSE. Let me just bring up the two charts so you can just see the type of movement that we're talking about. If I bring up cable here, and then if I bring the FTSE CFD in the bottom, actually for the FTSE 100, it was the biggest decline yesterday since the EU referendum itself, so last summer. Yeah, it's the biggest drop that we've had percentage-wise in the FTSE index. So obviously, if you're looking at these two charts here, I've got top and bottom. You can, if you were trading that spread, the very nice correlation between the two. And this obviously the flip reverse of what we had previously, where the weaker pound was helping fuel, if you like, the FTSE higher. This being the opposite effect that was happening yesterday. So would certainly keep an eye on that going forward. If the pound obviously continues this directional move and the trend now higher, which we're going to talk about technically, because there was a very interesting level which got broke late yesterday, which I think does actually change the game a little bit in terms of the short-term direction of where cable may head from here forward. But I'm going to talk this morning is going to really be dominated by a UK general election. But before that, a quick look at the broader market across the different assets we're looking at here. And as you can see, pretty flat in the equity markets, just a touch softer in the futures in the DAX. Usual almost state of play that we've had in the US equity market. We had a little bit of a dip, some volatility at the open, a dip as Europe left the market, only to be counteracted by quite a solid rally back up into the Wall Street close. So any losses ended up being very minimal overall. One thing that is being looked at in terms of some of the reasoning for the weakness yesterday initially has been that of some of the corporate earnings. Although this hasn't had a long-lasting impact on the market, you of course had last week a couple of the big banks report, JP, Wells and so on, all generally speaking posting better than expected numbers. So Goldman's was very much expected to be the same, and actually they were a disappointment. They were the first Wall Street bank this earnings season to report lower equity trading revenues. And so basically the gap on that performance of that particular division is widened them in second place by the widest margin in a long time against Morgan Stanley. Their shares were hit quite heavily. Generally, they're quite a large market cap stock as well. So that had some influence. They were down, I think, about 5% at the worst levels. Johnson & Johnson, another big name, were also weighed upon as well. What this is meaning, though, and the reason why potentially you keep getting these snapbacks in the late part of the US session is, well, ultimately there's a bit of a bigger play here as well. Yesterday we saw quite a concerted move lower in the US dollar following what you would call verbal manipulation of the currency. I quite like the way you've had the Treasury Secretary Mnuchin this morning saying Trump is not manipulating the currency, after he himself did exactly that very thing in an FT exclusive interview at the weekend. And so, him saying that actually, we're going to be a little bit delayed in certain fiscal reforms being pushed through. So this kind of Trumpflation idea is being unwound. And if you start looking at what markets are pricing for the next Fed rate hike, well, odds are dropping, and they're dropping pretty fast at the moment. If you actually look, 50% obviously is the key benchmark on which we look at for a rate hike being priced in by the US Federal Reserve. And actually yesterday we've fallen back below 50%. So June, which was seen as the next interest rate hike month from the Fed, that's when they've got the summary of economic projections in the press conference of Janet Yellen, that's now been pushed off the table. And we're down to about 44% probability for June, so now looking later into the year. And obviously the Fed are committed on their forecast at this point for another 2 rate hikes. Obviously, from an equity point of view, the lower this probability becomes, the more underlying support there is from a more accommodative kind of monetary policy environment from the Fed. So all the lesser reason for any sharp correction in these equity markets, because they will continue to be supported by a very gradual rate normalization process from the Fed. Obviously, the fact that the Trump administration has failed on the repeal of Obamacare, now this kind of hint towards a delay in regard to the ability to push forward corporate tax reforms means that this idea of impending inflation shooting into the US economy through an injection of stimulus on economic growth is starting to fade. And so what the market looks at is this US 2-year break-even rate, which is basically a measurement of inflation expectations going forward. That's plummeted more recently, and as too as the annual gain for CPI X the more volatile components of food and fuel. So any fears of inflation running away are also starting to decrease, and hence then the Fed need for an interest rate hike has declined. And so, just looking at some of the reasons possibly at why we're getting this type of movement in the equity markets, then obviously there's also the outside things that are going on at the same time from geopolitics, Syria, North Korea. So what the Fed would probably deem as external headwinds may well lessen their ability to be more aggressive on that rate hiking cycle. Just taking a quick look then, let's have a look at really the pound. That's the big talking point of the morning. And firstly, let's take a look at the rise from yesterday. And there was a very big spike that we had at the top end of that move, which came at around 6:30. For those who were monitoring their technicals from yesterday will know probably the reason behind that. And if we look back on a minute chart, you'll be able to see a really explosive, almost that whole candle or wick to the upside was pretty much instantaneous on the break just above 128. Now 128.06, there was a chart I marked up yesterday, so I just share that with you now. This is looking at the path of the pound and where we've been since the EU referendum, obviously the biggest intraday fall on record. We then had the post-EU referendum low, which defined a very key price point for market participants, that being the 128.06 level. Tory party conference, Theresa May ushering those words of hard Brexit for the first time. The pound flash crash during the Golden Week holiday in China and overnight saw that big spike lower towards the lower bound of the range that's defined the last 6 months really at 120. We then had a very key area which was higher inflation figures out of the UK and kind of sparked this fear of inflation now starting to rise amid the depreciation of that pound and that laggard effect into prices. And this came in combination with Theresa May's speech about her 12 principles of Brexit, which people warmed to and took comfort from her ability to be concise and clear about the path going forward. The pound saw a decent rally since then. We've then kind of meandered in this range between 120 to 125 before breaking higher through the late March highs more recently. And then yesterday really was a key point, because if you look yesterday, after we had left the market, that 128.06 was broken, and that immediately saw a spike higher up to a high point on the day of 129.29. So as soon as we got above really 28.06, a lot of this being propelled by what people would call a short squeeze, people looking to play this broader long-term range, and as such looking to short at this very significant level, which has provided stern resistance on prior occasions, and then just getting squeezed on that, stops getting triggered, large proportion of that, and then the price shooting higher. Now really this opens up quite an interesting prospect from here forward, as 128.06 now, we're trading at 28.62, I would say provides a pretty decent floor for price activity going forward in the short term. And actually, now that we've broken that figure, I wouldn't discount that over the next coming week or so that we don't continue to climb, with the obvious target probably being a look back up to 130 as being the next kind of logical round figure to target for the market. Now that we've got technically that break, I think you could potentially see that 28.06 or 28 handle now providing a bit of a floor for the next kind of push on the upside, now that that's given way. That's not to say that in the long term the price might still gravitate to the downside once these negotiations over Europe start to heat up in the months ahead. Now, why did it rise so aggressively yesterday? That has been a bit of a question for this morning. And one of the main kind of things, I guess, is because of this idea of if she can take advantage of the current domestic political situation. And let me just show you a chart to explain that a bit better. That's looking at this. So Conservatives hold a 20+ point lead over Labour as Theresa May has called for a general election. So if you were looking at a calculated or strategic timing in order to call this election whilst it's its most opportune moment to hit Labour while they're down, then this is it. And so this substantial gap at the moment and the kind of lack of credible opposition means that she can have her most opportune moment to capture a lot more seats in government. Now, don't forget that during the actual EU referendum, the Conservatives led Labour by 3 points. Now it's 20+. You know, it's a substantial difference where Corbyn and the Labour Party really have not been able to piece together any type of credible alternative to the government. And actually, people, I saw an opinion poll yesterday saying that people don't actually like Theresa May, they just respect Theresa May. And actually what this, what people I think are voting for here is the most credible option for Britain to deal most successfully with Europe in this idea of Brexit. I certainly don't think this general election alters the perspective of a Brexit happening. A Brexit is going to happen. And so that's the kind of the matter of fact about it. What she's trying to do then is lessen the risk of her being held hostage at every stage of negotiations by minority pressure groups. If you think about it as a kind of the Conservative Party as a bell kind of distribution, you've got the people who are quite stark Remainers making up a small proportion on the left, and then you've got the people who are very hard anti or kind of want to reclaim sovereignty, so much more harder Brexit people, and they're a small minority on the right. Actually, she can capture the bigger portion of the party in the centre. Then what she can do then is basically outweigh in her decisions the smaller minorities on either side. That means then that when she goes into negotiations with Europe, she has a much stronger mandate to make decisions on herself with the backing of the majority of her party, with an overwhelming majority in Parliament, which is critical. Now, this actually translating into seats, the electoral calculus, a prediction website, has said the Conservatives would win, if it was now, a majority of 130. Now, that's pretty huge majority. Now, I've read different estimates from different kind of predictions. It seems to range from around 100 majority to 150. So 130 is pretty centre, and I'd say that's probably your kind of median consensus, so to speak, at this present point in time. But that certainly would be a game changer, and I think it's that clarity that it would give the government a stronger mandate. You're also going to the people to give them the option to select their government, because let's not forget, Theresa May was part of this whole pantomime that came to a head after David Cameron resigned. She wasn't actually elected. Now we get the chance to actually, voice an opinion the opinion will be that the Conservatives will likely win a majority at this point. Now, the makeup is, how do the other parties fare? Now, this is what we're looking at, the 2017 general election result based on the average of the latest polls. So this is looking at, with the change of 2015 results, so how many seats were being added and taken, subtracted, and so on and so forth. Now, the interesting thing here is about Labour are due to lose a number of seats. Now, some of the question marks about the ability of an actual majority to be taken by the Conservatives has raised a few questions. One is that Labour has typical strongholds, particularly based in the northern part of England, who, no matter what, will always vote Labour, just given the union structures and so on and so forth. Very difficult then for the Conservatives to recapture those types of areas. But the one thing is that if you look at someone like the Liberal Democrats, now the Liberal Democrats are quite key to this equation, because they are the only party that kind of provides an alternative, and who are very strong for remaining in the EU, remaining in the single market. So for a Remainer, which, let's not forget that it was an awfully close call when we did have the EU referendum last summer, does the Liberal Democrat Party offer a credible alternative or protest vote, if you like, for them to encapture some power, and not that they would become the winning party, but that they could stop an outright runaway majority of the Conservatives. And actually then it's almost as if the Conservatives have their hand, or such a strong hand, lessened by the degree of Lib Dems have in Parliament to have a say on matters in negotiations on Brexit. So that's definitely the thing that most people are looking at. Obviously, one caveat is that polls themselves may be inaccurate. I mean, I myself remember covering the last general election, or the one before. I tried to think when, I stayed up all night to cover the squawk. I remember live at the time, and an exit poll came out. This was when the Tories had a surprising landslide majority, and actually the pound rallied for about the whole sum of 15 minutes, and then I just sat there for about 9 hours doing absolutely nothing. And so, polls can be, take them as you will on face value. They were wrong with the referendum. They were wrong with Trump. Let's not put too much faith in these at this particular point in time. So, couple of things to definitely think about. But the key thing that, even in some areas that voted Leave, it has been able to pose an anti-establishment party in terms of the Lib Dems. So it's something definitely to look at. Conservative supporters moving to Lib Dems then, or Labour supporters possibly switching to the Conservatives. Could that happen if there was someone sat on the middle in terms of their political view? And so there's a lot of still uncertainties here, but the one point of clarity is that most likely or not, the Conservatives are going to have a stronger, it's deemed, hand to be able to negotiate when it comes to talking with Europe. Now, the process of this would have been, in the current state of play, the fact that every twist and flow of the negotiations with Europe, Theresa May would have had to come back, Parliament would have had a say and a vote, and they could have vetoed deals. Then the process of negotiation would have gone back and forth, very long timeline. This then gets severely shrunk, and hence the more clarity, and hence the positive reaction that you've seen in the pound. So that hopefully explains a little bit by the reasons why we rallied so aggressively yesterday. The one thing, I mean, this is very much longer term, but an interesting point nonetheless, was that Conservatives could obviously win scores of Labour seats in the North and in the Midlands, who are just tired of the lack of credible Labour argument. Their stand to gain as well from divisions within the UK Independence Party. I mean, UKIP were so strong with their angle under Farage going into the referendum, but UKIP has been in disarray the last couple of months. And I don't even know who's the leader at this point. It seems to change every week. And so I think UKIP are going to come out as they probably normally do, and I think very underrepresented. But I think a lot of those people will move back to the Conservatives, because at the end of the day, the Conservatives are fulfilling the mandate and are following through with the Brexit. Now, one interesting, again, the long-term point here is that this election may in time result in a stronger opposition. If defeat prompts Jeremy Corbyn to stand down and gives the Labour Party a chance to rebuild from the rubble, is this now the point where Jezza has his final stand before then he moves aside and the Labour Party starts to rebuild itself? You know, Jeremy Corbyn is probably the least popular leader ever in the party's history, worse than Ed Miliband, and that says a lot. So definitely this is a long-term thing to think about, but in the short term, I know some of you watching this from a trading point of view definitely got hold of some of this move, and the thing that I liked is you didn't overthink it. You just went with the trend. When some of these key handles were breaking, 127, you can see here, even if we just look now in hindsight on the chart at 127, 128, whenever an asset tends to move in large figures on an intraday move, it tends to target handles as a psychological point to push the price to. Now obviously technicals come into this as well. We talked about that 128.06, and so 127 you can see we got to, there was a bit of resistance and testing on that point. A break sees a push quite aggressively to the upside. It then comes back, a test around that 28 and 28.06. That actually on a minute chart, that's what it looked like. Pretty much 150 point move, 150 pip move, instantaneous before coming back, as all those stops got squeezed and the price shot higher. But since then we have still maintained above that key level, and so actually I'd still be looking possibly in the short term to play this cable move higher if the entry point comes down toward that 128.06 level again. Certainly this comes as well in the context of the US actively looking to weaken their currency. As much as they say that they're not doing that, that's exactly what they're doing. And if the Fed push back their rate hike possibility, this is all to do with this Trumpflation trade being slightly unwound by the fact of no immediate forthcoming stimulus. This means that the dollar should weaken. And now that the Dixie's back below 100, this obviously supports this this trend for potential further upside movement, with overall goal I would say is 130 in cable. And even on the intraday today, I mean, given these pivots, don't forget, are hugely wide given the movement from yesterday, but 130 I'd say is a target upside, not maybe today, but certainly in the days ahead. One other thing as well, technically a few people were talking about yesterday in terms of the spot price, the pound rising above its 200 DMA for the first time since the referendum. So a few different things ongoing here to create such a move, to help launch the price higher, if you like. This is one interesting graphic as well that I saw. It kind of just maps out similar to what we were talking about on that chart with the text that I had on a few moments ago. But this is looking at the pound and politics, and really a couple things to take away from this. One is that politics definitely is still a huge driver of financial markets. So, you know, obviously over the coming weeks going into now the 8th of June, which really realistically isn't that far away, you know, you're going to have to swat up on your UK election knowledge. Obviously we'll be covering that live, of course, but then also the idea that the new political norm is a fluid situation. You've had, Will and I discussed this briefly yesterday, you've had Donald Trump do some massive U-turns on policy, not calling China now a currency manipulator, saying NATO is now great, you know, saying all these different things that he campaigned completely the opposite, and now he's changed tact. Theresa May, I saw in the paper this morning, vehemently disagreed with calling a UK election again and again and again and again and again, only now to change her mind. Now, I see the strategic way that she's doing this, and I can see why she's doing it. And what I'd say is that, look, I'm not here to have a political opinion about her. What I am here is to try and figure out where do we go next. And actually, the one thing is that you can never discount anything in politics, is what we're finding out. And that actually the fate of a leader, the direction of their policy, can change very quickly. And I think that's important. What a politician says one day might not necessarily apply the next. And this is actually a new political world that we live in. This is actually very different from what we've known for many years previous. And so the snap election certainly is a bit of a game changer in that respect. But going forward, definitely this will be something you need to keep an eye on for commentary coming out of other members. Polls going forward then, what I'd be interested to hear from the likes of YouGov and so on, is how do the likes of the Lib Dems do in terms of cultivating support as the most credible alternative for a more stronger EU stance and saying in the single market. The SNP, unlikely to create too much of a deviation from their current path. Scotland obviously very pro-Europe, and so likely to remain the case. I would say it would probably be extremely hard for the Conservatives to take more seats from them. So think of it this way: if Lib Dems come out and have a strong showing in the election, in combination with I think about the 56 seats or so that the SNP have, then actually that's a credible opposition in the Houses of Parliament for the Conservatives, irrespective of the fact that they'll probably have a slightly, or a bigger majority than they've had in more recent times. Okay, quick look at some other things just to round off the news from overnight. Now, this is obviously much more of a lesser focus on the broader macro perspective short term, but we did have the oil inventory numbers come out last night. These were the numbers. You had a crude drawdown of 840,000. This was against expectations of a draw of 1.4 million, so a smaller draw than expected. Cushing, a draw of 672,000. Gasoline, a build of 1.374 million. Distillates, a draw of 1.8 million. Now, looking at 9:30 on the crude chart on the bottom, I can see here that there was a slight downtick in price movement, but nothing particularly dramatic. About 25 cents or so. And we've already recovered back to pivot where we're trading at the moment. Obviously, we're looking out for the crude oil inventories. We'll get those later on this afternoon. That leads us on then to have a look at the setup for today. And it's a pretty quiet one. You actually have Eurozone inflation data coming out at 10 o'clock, but that's a final March reading, so unlikely to deviate from the expected values. You've then got really not a great deal out, and likewise for the US afternoon. You've got the crude oil inventories, but I think this is very much just an issue for WTI crude. I don't think that will have any broader ramifications for the equity market. Fed's beige book is normally a non-event, and I would expect that to be the case again. The only interesting thing maybe is you have a couple of Fed and ECB speakers coming out this afternoon, but the Fed guys are, Fed lady and guy are both non-voters. And at this point in time, as we've just discussed, the actual timing of the next Fed rate hike is some way off now. So the market's kind of discounting that happening in the near term. Okay, so one final word of warning just to wrap up, certainly for the newer traders, is yesterday you had one of the biggest intraday moves in the pound in a long time. Likewise, in the FTSE, it was the biggest decline you've had since the actual EU referendum itself, which obviously is one of the biggest market moves ever. Do not think that you're going to get the same type of price movement today. Don't fall into that trap where you've had a good day and you start thinking of, trying to hit the market quite aggressively again in a market that's probably not going to offer the same type of price movement that you had yesterday. So today is almost like trying to eradicate the euphoria that you might have encapsulated yesterday and just hitting the reset button and then refocusing and restarting from point zero again. Discount yesterday from your thinking and look at the market objectively today. Because now that the news has happened, the market has moved and repriced substantially. It's unlikely to see another 200 pip move in cable today. Highly unlikely. And so just trade accordingly to what you see. And obviously that 128.06 level, as I said, on the downside, should we get back down to it, you need to be watching closely. Okay guys, with that, enjoy your day. Have a good session. I'll see you in the chat room.